China strikes back. Full-blown trade war ahead. Let's take a quick look at today's trade alert. And first of all, I wanted to make this really easy to understand how we're generating profits, especially in a big downturn in the market and potential stock market crash. So here's a screenshot from our track record on Friday. This is after we covered our covered call and before we wrote the new one. And so we were sitting on a 5.74% return with $30,435 in profits. And today we are up $1,274 after covering the covered call from Friday for a big profit, which was protecting us to the downside. And now we are issuing a new trade alert. So we're up 5.97% before writing today's covered call. So real quick, I'll take a look at the trade alerts so you can get on that if you're currently following the program. So if you already have the SPY shares, you already wrote the trade alert on Friday, you're either assigned for a maximum profit and in cash, in which case you can ignore this step, buy the SPY and go to step 3. But if you were not assigned, you still have a very similar return, and that's the return we're calculating in our track record. So we're buying to close the May 13, 2019, buy it at market, get out, and we're going to re-rent our SPY shares out to stock speculators with another in-the-money covered call at the 277 strike. We have about $5.62 of protection plus our 1% sniper hedge. We'll look at that in a little bit. That protects us if we go below 264. So we're quickly approaching that level where the market could really break down. There's a lot of open interest sitting in this 280 and 277 range. So that just means that there are big investors who are willing to buy blocks of 100 shares of the SPY. For every one open interest, which is right here, that represents 100 shares that are willing to be bought at that price. So someone is willing to buy 50,000 shares of the SPY at 277. Now, if we do see the market collapse from here till tomorrow, we can simply cover this position for a big profit and move our strike price even lower, which is why we prefer to do the covered call strategy instead of writing put options. And so it puts us in a much safer position where we, if we're wrong and we end up assigned, we end up in cash with the guaranteed profit. If you do the opposite of this strategy and you try to write put options, you may get assigned overnight and then be issued a bunch of SPY shares for a huge loss the next day. So in one setup with our strategy, we end up with a guaranteed profit. We're in cash, can sleep well at night. You try to do this the opposite, you could end up with a huge loss and be stuck with SPY shares that you're going to have to liquidate the next morning. So much smarter to do it the way we're doing it because you can have complete control of your assets and just slowly churn these profits out. For every 100 shares of the SPY, we're recommending to buy to open 1 July 19, 2019, 264 put. And this is a price level where if we reach it, there's a big risk of going much further down at a very fast rate. So this put option can quickly jump up to $10 to $15 in this sort of event. Right now it's trading around $340, so it's a little bit more expensive, and we're up about 10% on that position. And it's just 1% of the relative value of the SPY. So let's just take a look at exactly how we generated profits from from Friday till today, and how this adds up over time. Okay, so step 1 was, let me zoom in a little bit more. Step 1 was to buy to close the May 13, 279.50 call option contract. And so the SPY actually traded down during this period. When we first wrote the covered call, we were trading at 283. And if you remember on Friday, it miraculously traded all the way up to 288, which gave us a huge room of cushion over the weekend, which was good because Trump has been tweeting away about how great our position is and how we're going to punish China. They're retaliating. So this could escalate before it gets resolved. And that's great for our strategy because volatility goes up and it makes it very easy to generate a huge return simply selling the call option to stock speculators. Now, while we lost $1.40 from the time of writing that covered call to covering it today, we actually made a big profit on the call option. The call option lost a lot of value. It went from a value of $4.75, which was a credit to our account on Friday, and today we bought it back for $2.47. So we made a profit of $2.28, $125 profit per contract. And again, if you use either Robinhood, free trading, including option assignment, that helps our strategy a lot, or Interactive Brokers, if you have a 401k. These are my two favorite brokers to recommend because they have such low costs, which is great when we're trying to do this type of strategy. So the net profit, when you look at everything, including unrealized losses on the SPY, which we don't really worry about. Of course, we want to protect the asset, but we know 10, 20, 30 years from now, the SPY is going up. S&P 500 is going to grow. Nothing short of a nuclear war in World War III would likely stop America's growth. So all we got to do is play it safe, and you'll see with the in-the-money covered call, we can do that. So with $88 profit per contract, if you look at the return on a $30,000 investment into the SPY, that's a 0.29% return on capital from Friday till today. Now, what happens if we can generate a 0.29% return on capital 3 times a week, 52 weeks a year? That's 156 opportunities to grow our cash safe. Well, that turns a $30,000 investment into $77,939. That's more than 100% return. You're not going to get that type of return buying and holding stocks. You're not going to get that type of return trying to short stocks. And if you do, you're going to do it with a whole lot more risk. So we went into Friday's trade with a delta that was over 80%. That means we have an 80% probability of not losing money. And so these are the type of odds we like. It's basically like you're the casino. You've invested to have the desirable game to play and the capital to back it up. And we get a bunch of hungry gamblers coming in who want to get rich quick. And of course, that never works out well for them, works out great for us. And so it allows us to protect our capital. And we actually have a situation where a gambler is going to pay us to protect our cash and generate income. Normally, buying insurance costs money. But thanks to the lovely stock market and just how uneducated a lot of people are, we can do the opposite. We can get paid to insure our assets and generate a return. And the worst case scenario is mostly that if we are assigned, we get a guaranteed profit. Let's look at the guaranteed profit on today's trade. Okay, so step 2, after we covered that trade, you can see this is a great return. We're actually not trying to get this return. We're trying to get less than half of that. But because volatility is up, the prices for options are skyrocketing. So this is great news for our strategy. And you're going to see we're going to make a lot of money during times of high volatility with low risk, which is what we want to do. We want to generate profits without having to risk a lot of capital. So today's trade alert, sell to open the May 15th 277 call option. Now this is an in-the-money covered call. So up front, we're agreeing to a loss on the SPY of $4.69. But the stock speculator will pay $5.62. That's a net profit of 93 cents a share or $93 a contract. So that's actually a greater return than we had over the weekend. If we're wrong and the stocks fly up and we get assigned. Now, if the market goes below this 277 level, tomorrow I'll issue an emergency alert. We'll buy back the covered call for a big profit and then just move that strike lower. In fact, if we're anywhere near that 277 strike, expect to do a emergency alert tomorrow right at noon. I'll wait till noon, Monday through Friday, to do all trades so that it's easy to predict. And the SPY is not going to crash a huge amount in any single day. It's just got too much money flowing through it. And oftentimes we're better off being a little more patient and letting sudden sell-offs rebound before we write these covered calls. And that allows us to realize the profit in the SPY and then lock in these profits with a covered call. So that's the plan. And again, you should have 1% of your portfolio in this put option at the 264 July 19th strike. We got in for 330. You can still get in for like 360 right now. That's a great price. It's only up about 10% right now. And that's our trade alert for today. Now I will take a quick break and look at some of our other products. If you do upgrade your free trial, you get a 30-day free period access to our diamond level product. That's where we take what the SPY already buys for you and just buy it directly. And the return on this is about twice as much. There's more volatility in individual stocks, and thus we can realize better profits and also aim our trades specifically for each company. So this portfolio is doing very well. It's not a 19% return. We'll cover these positions tomorrow. It was up about 13 last week, but that will go up considerably as we wrote all these in the money covered calls. Thank goodness we had it on Apple. Apple's getting hit really bad today. But we're protected to 180. We'll cover this tomorrow and issue a new covered call into Friday. This portfolio is really good for investors with 150K or more because that's what it costs to rebuild the SPY ETF's core positions and own them direct. So when you do that, there's a lot of advantages. We're getting twice return in our diamond program with 1/3 of the trading. So we're only trading on Tuesdays. This one's doing phenomenal. And the companies in this are Microsoft, Apple, Facebook, Intel, Cisco, Comcast, Bank of America, and Wells Fargo. Tomorrow at 1 Eastern, we have a webinar. I'll go over this portfolio in great detail. Just know, if you are on a free trial, the second you do upgrade, we're going to give you 30 days access to this for free. And we have one other portfolio. This is for very rich folks. You have to have at least $1 million to follow this program. It's extremely boring. It's traded exclusively bonds since conception. And it's just doing covered calls on the TLT. Now, it will rotate into a similar strategy as the high yield, but only when the coast is really clear and valuations are relatively low. So it's been all bonds since the December crash. It's been just pulling in a very boring return. It's up 7%. Trades on Thursdays only. You'll also have 30 days access to this program, which is not for everyone. It's really for our $1 million plus subscribers who are okay with less return but less risk. And you want to just see a low volatile, high return strategy that's consistent over time. So this will actually rotate into Amazon, Google, Microsoft, Apple, and Facebook once the coast is clear. And that will most likely be after a significant market correction, probably to the tune of 30 to 50% if this trade war is not resolved. Now, if the trade war is resolved, I still think it will happen after we've been at a sizable correction. And again, this will rotate into these. But to buy 100 shares of Amazon and Google costs $182,000 on Amazon and $110,000 on Google. So just to get started with that portfolio, with just those two companies, you're going to need over 300 grand. So you can see why this is for millionaires only and is similar to the high yield portfolio, but this one stripped out those two stocks so that you can build it with 150K. So just to sum it all up, and again, for those of you in the crypto, our crypto portfolio software, Google did an update. We're having to roll over the technology. The last time we updated this portfolio, Bitcoin was at 5,300. Now it's at 7,300. And so it's probably sitting on about 100% return. This is also included in our diamond level program, and we'll be getting you guys updates on that daily moving forward as soon as it's fixed. So that's just a review of what's going on. Here's our basic portfolio. After today's covered call, it boosts the return considerably, but remember, once we cover this, we'll have to give back some of this credit we took in today. So if you have at least 15K, you can use one-to-one leverage in most brokerages, get 100 shares of the SPY. All you got to do is write the covered call Monday, Wednesday, Friday, right at noon, you get the trade. We're going to generate consistent income, and this is a very easy program to follow. You don't need the spreadsheet to follow it. You can do this in your head. If you do upgrade from the free trial, we're going to give you access for 30 days free to our Tuesday class, which is the high yield income, ideal for 150K portfolio size. And for those of you who want to see how we trade even more conservatively, watch how we trade the U.S. Treasury market, which is potentially the last safe haven in the world right now, outside perhaps Bitcoin, which we would never recommend going over a 5% total portfolio position in. So that's our update for today. Keep a lookout for the webinar invite tomorrow, 1 Eastern. We'll go over all of this in great detail, do Q&A. We're getting quite a crowd. Tuesday, Thursday, 1, you get your live webinar. So thanks again for your time. And I look forward to publishing our Diamond membership content tomorrow. Again, that won't go to free trials. It'll only go to people who are paid members on the basic program who get 30 days access, or to people who've actually upgraded to our Diamond level program. So thanks again, and talk to you tomorrow.